Where do you find alpha in a world that feels like it's upside down?
The alpha gap is pretty much saying there's innovation, there's potential in the market of people that are trying to raise the funds, but actually failing.
256 Network, what's the origin story? What were you setting out to do?
256 Network original story, it started with that one small thought to bridge the gap between allocators and GPs.
I'm curious, where do you see the value? How did it come together, and how will investors benefit from this collaboration?
We both team up with the Alpha Summit to get the right folks and crowd together to share the insights and learn from each other.
We want to be able to figure out where to allocate capital and where to work with the most interesting people that we can possibly find to work with. And that's in the end what it comes down to, because this is a very people-driven business.
If we would only go for after the top 20 of the top quartile, this makes the societies we are living in the different geographies just better. If you believe that the world has actually challenges out there, then we believe profoundly the whole businesses that are actually out there will be transformed.
Hello there. Hello. How's everyone doing today? Good. Everyone is caffeinated. I'm delighted to be here. Hello, everyone, and welcome to the inaugural Alpha Summit here in Singapore. Now, for those of you who've had a chance to join us in either of the past 2 years of hosting this summit, you will know that we've historically gathered quite an excellent group of investors from across the capital stack, upwards of 400 of them over the last 2 years. And so absolutely delighted to be bringing this summit and this forum into Singapore, which is really positioned at the intersection of so many forces in the world today. So in terms of why we're here to continue the dialogue that we started, which is, where do you find alpha in a world that feels like it's upside down? Anyone agree with that general sentiment? Yes, very much so. Between the geopolitics, the changing demographics, with AI rewiring everything from supply chains to the biology of our own bodies, it can be difficult to make sense and to find the signals amidst all of the noise that's out there. And so our goal for this summit is to very simply introduce you to the people who are on the ground, who are closest to these trends, and to decode them into plain English, so that each of you is equipped to make the right type of investment decisions. At the end of the day, where we choose to spend our time, our energy, our attention, and our capital is influencing the type of a world that we're going to be living in via all of the companies that ultimately we're backing. And that, ladies and gentlemen, is the intention of today. Now, for those of you I haven't yet met, you might be wondering, who is this lady and why am I listening to her speak? So, hello, my name is Ileana Ores Valiente, and my role today is to be the MC, yes, but to also decode all of the trends and to help you make sense of the very wide range of topics that we have on today's agenda. I do this capital decoding all day, every day in my role at Accenture, where I'm the managing director and the head of all of our innovation centers for North America and LATAM. And I'm pleased to be an early investor and LP into the team at Allocator One. I really love what they're doing, and so happy to be on stage here again today. So with that, let me tell you a little bit about today's agenda and what you can expect. We have a full afternoon of content, and you will hear everything from LP-GP candid conversations to GP spotlights, where you'll hear from a hand-selected group of extraordinary GPs as they don't pitch you, but they'll be explaining the themes behind their investment domains as part of your education. And what we're bringing together today is a global view brought to Singapore with the Asia lens, and a lot of the details are in a report that each of you will have a chance to download and take home with you today. We do have a special treat this afternoon. Flying in all the way from Austria, we have the Vienna Philharmonic. So that will be quite the unusual treat, and I can confirm they're wonderful. By the end of today, we might all want to go to Vienna and learn how to waltz. So that's definitely the goal. And after the content we're through today, we are going to have a dinner and a reception, as well as the Alpha Awards, recognizing exceptional GPs here in the APAC region. If London is any indication, these forums tend to run quite late. We had to close down the venue in London with the staff saying, it's 11 p.m., please leave. So hopefully Asia is going to be just as exciting. So with that, let me welcome up to the stage the founders of Allocator One and 256 Network, and the reason that we are all gathered here today. So Felix, Drew, and Michael, please come and join me. Perfect. All right, gentlemen, why don't we start by helping to ground our audience and helping them understand who is Allocator One, who is 256 Network, what inspired you to bring this group together, and is it just me? Am I getting an echo? Anyone else hearing an echo? No. Okay, perfect. It's all in my head then. Just wanted to double check. Felix, I'm going to start with you. Can you walk us through quickly what is Allocator One and what is the problem that you originally set out to go solve in the first place?
I will try to keep this very short, and first of all, thank you all that you came today and put the trust into this event and into us here. We started the journey of Allocator One basically in 2023 by actually saying the world is very complex, and we actually see that there is amazing people that are very specialized, that have 10, 20 years experience of building tech companies, that are actually often about to build a new venture fund. And they are very specialized in something. And we have seen that the field of this new fund managers, generation 1 and 2, is first of all a growing market, a growing segment, but very intransparent. So we are building a platform to give actually the access and the transparency on all of those specialization fund managers around the globe. And nowadays we see more than 80% of the whole world, meaning around 850 to 1,000 a year, and we pick the top 3%.
Amazing. And Drew, let me pass the floor to you. 256 Network, what's the origin story? What were you setting out to do?
Yeah. Originals, first of all, thank you everyone for coming, and we welcome Allocator One to Southeast Asia. 256 Network original story is very funny. It started with a small WhatsApp group, and Prashant is there. He's the chair, founding board. He's gonna come on stage in a while. We were just having a chat, and I was just telling him, we know a lot of people in the world, families, institutionals, politicians. What do we do with that? So we just gathered a group of 50 people back in the days. It started in 2018 December. It's been completing 7 years this year. And it started with that one small thought to bridge the gap between allocators and GPs. That was the thought and the origin of the entire thing. Obviously now we have allocators cut across asset classes. And since then, we are in 36 countries, 350 members, try to follow Chatham House. It's kind of a private members organization. And it's been a fruitful journey. On top, we do a bunch of things now, but the organization has been as vanilla, buy and white, private members club for allocators and GPs from VC and private equity.
Now, there are a lot of partnerships out and about in the world. The partnership with 256 and Allocator One, I'm curious, where do you see the value? How did it come together, and how will investors benefit from this collaboration?
First of all, it is originated in friendship and trust between these two organizations. And for us, the objective is to give better insights to the various families and institutional investors around the world. as 256 is having like an elite club of those kind of families and institutional investors, we both teamed actually up with the Alpha Summit to get the right folks and crowd together to share the insights and learn from each other.
I think the partnership, of course, what Felix said on the partnership level, why it started, because I loved hanging out with this guy. Simple as it can be. And last 2 years, we've been doing a small of a 256 private dinners or breakfast at Alpha's event in London. And our members really loved it. And this is something, GP category is something, EFM category is something we've been not tracking for a while. And this gave us a thought, let's just restart the entire thing when we started engaging with Allocator. And that's why we are here, because we have an emerging managers club under the main allocators club. It's just that it was silent, and this gave us the opportunity to restart the entire thing. But more than that, I love the energy and the connection with Felix, Michael of course, but hung out with Felix a lot in the last couple of years. We worked also together, so that's a plain answer to this.
And so let's talk about Singapore. You've run this franchise now a few times in London. What was the impetus for bringing it to Southeast Asia?
I always felt, after seeing Allocator London events, Alpha's London events, Europe, US is Europe and UK primarily the focus was, but US market, Allocator has been tapping from the fund of funds category. But I always felt India, Southeast Asia, and of course China is there, but is the market which one shouldn't miss. And with their kind of model on the Allocator side, I think this is a great opportunity for an organization like us to collaborate with a fund of funds, because there are emerging managers in India, in Southeast Asia, who've been looking out for opportunities like these. There are platforms, but not such platforms exist. But they've been a big support from the Singapore Indian government to helping the entire ecosystem, to attracting global LPs and allocators into this part of the world. And Singapore being the hub which connects deeper Asia and the Central Asia, so that's why we thought Singapore.
Got it. So Felix, I'm going to pass the floor to you and ask, together we're gathering to talk about private markets and venture capital today. What is it and why is it that this is an asset class that's worth paying attention to as an allocator?
Well, quickest answer to this is that post-World War, last century, everything scaled basically in the physical world, massively. And this was obviously the play to be in, and I think this lasted into the 2000s. Then, just remember, like 18 years ago, we had the iPhone moment, and the physical world we actually brought online. Netflix, Shopify, Amazon, all of those kind of things. But now, we are running on scale in an era of AI, data, digital infrastructure. So when you look into what is really growing quickly and where you have to be part of, then it is now the next era of the digital assets AI plays. And here it's not only AI, it's also quantum, decentralization and others. And we see there's no way, if you believe that the world has actually challenges out there, then we believe profoundly the whole businesses that are actually out there will be transformed. And AI and compute is actually the fundament of that.
Makes sense, makes sense. And so we've been working on the research paper, which will have a QR code for folks to download, that shares the perspectives on the Asia market, all things VC. We won't drain this slide, but clearly emerging market that's worth paying attention to. So Michael, the question I'm going to ask next is to you. You focus at Allocator One and with 256 Network on emerging fund managers. common wisdom, or the misperception out in the market, is that backing EFMs is a bit of a risky move. So you're running in the direction that other people don't necessarily spend a lot of time exploring. Why is that? Where is the alpha that you're seeing? Why are you so bullish on this sector?
So we could talk about this for several hours. I'll try to keep it short, Felix, don't worry. So the main way that I think about it today is the following. I've been building new things, building products, new companies for a long time now, over 20 years. Really, what it mostly comes down to, whether you're successful or not, except for working really, really hard, is timing, right? And I want to look at the same kind of aspect from a different angle. Felix just talked about AI. Most people would be hard-pressed to make a case that there's absolutely no hype cycle in AI right now, right? And at any given point in time in history, there's always been some kind of hype cycle. These are obvious, these are completely apparent. It's completely apparent what is the big wave that you need to ride in such a way that you will hopefully get very high and hit the beach again at some point. So it's apparent, everybody knows, right? At the same time, if there's a hype cycle, that also means there's a lot of things that are very much overlooked because they're just, because all the spotlight is on the hype cycle, right? That means at any given point in time, there are people really struggling to raise very small funds, raise very small pre-seed rounds for things that are going to be the next hype cycle 15 years from now, at any given point in time. And at a deep philosophical level, so to say, that's why Allocator One exists. So at both ends of the spectrum, we want to be able to figure out where to allocate capital and where to work with the most interesting people that we can possibly find to work with. And that's in the end what it comes down to, because this is a very people-driven business.
Now, as a result of the flywheel that you've built with Allocator One, you have access to a lot of data of where is the earliest stage capital flowing. I think our audience would probably find it helpful if you could point out what are some of the trends that the data is showing you and the non-obvious places that are emerging next as investable frontiers.
So the slide that you see here up behind me, right? It lists several sectors that we think are very interesting right now that are also seeing significant capital inflows. So applied robotics and automation. Felix mentioned the last mega cycle basically meant building enormous amounts of production capabilities all around the world. What's happening right now is actually making that production capabilities much smarter, more automated, in the end giving us more capacity to build cool things that we all need. To keep it very simple, right? And I could now go down the list of all of these areas and make a case why all of these are going to be very important in the future, but really when you look at it, it's really quite obvious, right? So I think most of these are quite clear to most people that are working around venture in any capacity. But within each of these sectors, there are specialists that have been in these sectors for a very long time, and that are now starting to kind of use their lens that they've created over the last decades of working in whatever it is they've been specializing in, to start allocating capital to the things that they believe are going to be most important looking forward. That is who we're working with. So I think right after this session, you're going to see somebody who's working in applied robotics and automation, Simon Lancaster, who is a fund manager that we wrote one of our very first large checks with. For example, he has 50 patents to his name, he was at Apple, he has been a founder, and now he's running a fund that is working in this sector. For us, it's very important to invest with people that have profiles similar to that. Because they're going to see things that are non-obvious, and they're going to commit very early, and they're going to make outsized bets in very interesting things, in the areas that are intrinsically already very interesting and growing very fast.
There's product market fit, founder company fit, and there's GP fund fit, and I think that's exactly what Michael was talking about here. All right, so I'm going to shift gears to this new concept of the alpha gap, and I'm going to leave it to Felix to define it for us.
So we have these amazing managers out there that have actually the idea to start a new venture fund. And at any given time, I said there are 850 to 1,000 a year. The alpha gap is pretty much saying there's innovation, there's potential in the market of people that are trying to raise a fund, but actually failing it. So this is the capital needed in order to close the funds that are starting off in the market. And then there is the real alpha gap, what we define as there's the top quartile, where there is actually no question at all they should receive capital because they are working on narratives, on theses that drive the world forward, and that are working on theses that make our life better and really give us an amazing outlier return. And this alpha gap is something we watch out because in all the different regions in the world there is an alpha gap in the US, in Europe, in Asia. So if we would only go after the top 20 of the top quartile, this is the gap we should actually look after and close because this makes the societies we are living in the different geographies just better. It's new employment, those are the people going after the real substantial deals in quantum, decentralization, AI, application layers of AI, and so on and so on. I stop here because otherwise I talk long.
So, Dhruv, I'm going to go to you next. I know we have the double click of some of these alpha gap statistics in the APAC market.
Yeah, I think India, let's talk about like the alpha gap is 6 billion, which is a phenomenal, India itself is a big market. But having this number is a question of how we are closing. People are announcing the point, but the real closure is the gap. With Singapore as well, I think I can just talk about these two. But I think the depth in the markets, the programs driven by these Singapore governments like Temasek or EDBI or within India with Aadhaar and UPI, I think the depth with the specific like funds focusing on specific areas, I think that can bridge the gap. So that requires innovation. So I think, yeah.
Just one statement because I think when you talk about Temasek and so on, there's many players in the market that are doing a phenomenal job. And I think for many years it was very obvious that you back and invest in very proven models, generation 6, 7, 10, and so on. I think the belief that some of here in the room share, at least for sure all of us here, we very much believe this. It's very counterintuitive maybe to go and look after the early stages, but those are the ones where we believe they have even less risk than actually the ones running for a longer time. The reason for that is that they come with the real operator and investor skill set to actually apply where it is really now needed.
I agree with you.
So I believe, to bring this down to practical terms, what does this mean? So Arushi and Swagat are in the room somewhere. So back there. So Arushi, Swagat and I do the manager selection at Elevator One. All of us are in pretty much all calls. We get over 800 applications a year. We talk to over 400 new managers a year. I believe that most reasonable people, if one of you joined us on all of these calls, we'd probably have 60, 70, maybe even with some of you 80% overlap in the funds that we back. And if we were not capital constrained, we would mostly just take the entire fund after a couple of calls. It's that obvious, right? So when you really look at it from an extremely macro lens, thinking about what actually needs to happen to move the world in the direction that most of us wanted to move in, what are the things that we need to deploy capital to? And then it turns out that really, as societies, we're really not great at it yet, right? That is the interesting thing that I've learned over the last 2 years talking to thousands of these emerging fund managers. It's really quite clear which direction we want the world to move in. And interestingly, that's also where we can make a lot of money. So the overlap is very high.
Speaking of overlap, I'm going to shift us in a slightly different direction. Usually the world of venture capital and PE and buyouts live in two separate boxes and investment sleeves. But Felix, I know we've had a lot of conversations of late around where there is overlap and why we can be paying attention to the signals in the venture world and actually realize that there is a lot of relevance for them in the buyout space as well. Let me talk about that.
I mean, it all boils down if we believe that the world is fundamentally in a very big shift. And in our belief is we have a geopolitical shift that is unavoidable. We are going from a Western world to an Eastern world. And that is one of the big reasons why we are here. 20% of all of the 1,000 managers that are coming up every year are coming from the Asian market. many of them are coming from the Indian market. So we have started India, then we are now having and setting up a shop here, an office here in Singapore, because it is not only already relevant, but the data also clearly shows it is getting more and more relevant in an unavoidable speed. So if you believe that geopolitical change is happening and that technologies are actually profoundly changing all the different businesses, not anymore only physical world online, but really in the root cause, in the DNA of the businesses as such, and the convergence of those businesses and mobility, and all of, if you just believe that, then buyout markets and the buyout opportunities, we need to read the signals on the speed of change that is currently happening on a global scale. Because buyout means you're buying into, you're overtaking companies, and your equity story needs to hold true not only for 7 years, but also for the next buyer, so for 10 to 20 years. If you don't take into consideration the speed of change in all of the different industry segments, then I would say you probably are at risk. And you have hundreds of thousands of those opportunities, because it's not only succession cases, it is also many existing businesses they just need an update of their current business model. An update means integrating new technologies.
Maybe just a couple words on this. It's very similar to what we see in venture, because venture is basically bifurcating into the mega funds that are basically moving into a completely different business model than what we know as early stage venture. And then the funds that we invest in, although we invest at the very early end of that spectrum. And then there's a large swath of funds in the middle that right now, as you speak, are turning into zombie funds over the next decade. And in buyout, it's very similar, because I would, in my head, it's companies between 15 and 75 million in revenues, 15% EBITDA, strong customer base, enormously cash flowing, but nobody wants to buy them because, if you have a 700 million private equity fund, it doesn't move the needle, you can't, right? And this is also a structural problem that we're now seeing, because we're getting inbound from people that ask us, hey guys, can you do the same thing for our buyout fund, because we have the exact same issues. So this is a systemic thing that we're now noticing.
And you're also seeing this trend popping up in APAC, which is part of the reason why this is being brought up on the panel right now.
Basically, everything we're talking about is no difference from any country to the next. It's completely the same. So it's the things that we're talking about on stage, they're true for basically everybody we talk to.
Perfect. So on that note, I'm going to encourage you to take out your cell phones, which is the one and only time I will encourage you to do that today, to scan the QR code, and this will lead you to download the recent report that we've just put out with the global and Asia cut of the data. Now, with that, I'm going to invite up to the stage one more special guest. So, Prashant, with that, I'm going to invite up to the stage one more special guest. So, Prashant, Prakash, wherever you are, I think I saw you earlier today. If you wouldn't mind, please join us up here. Welcome, thank you for joining us on stage. All right, please grab a seat. Yes. Now, Prashant's background is fascinating. I think I can safely refer to him as the godfather of venture capital in India. He's founding partner of Accel India and is also a founding board member of 256 Network. And given the collaboration between Allocator 1 and 256, we thought it'd be great to have him join us as well. So, Prashant, the question I have for you is related to a theme we covered at length in the report around the national interests and how countries are able to set a trajectory in terms of building new investor-type ecosystems. Now, in India, would be curious to get your perspectives to share with the room of how you've seen that play out, and of course in broader Southeast Asia, given your remit at Accel.
Thank you so much. And I really appreciate the coming to Southeast Asia for Allocator 1. I think that's as 17 and 18 years ago, I mean, we were emerging managers and we know how difficult it is to get started. So, and we've been talking about this, getting the CFM started in the last 2-3 years. But thanks to his hustle and meeting you guys, I think we've been able to get this thing started here. So I think you're doing human service to catalyze the fund ecosystem here. Thank you for being here. Yeah, a round of applause for. So I think the India venture ecosystem, while it looks like it's been a long time, it's actually less than 2 decades. The whole ecosystem from when we really got started to now is less than 2 decades. But I think the real interesting thing of what is dramatically shifted is the public market ecosystem. So the last slide, which is about buyouts, I think the very important aspect that was missing in India. So India was a great place to build, Southeast Asia was a great place to build, but no monetization. So how do you really get money out in the ecosystem? I think that is a huge multi-billion-dollar change that has happened in the ecosystem. So this will be one of the most important public markets anywhere in the world, with captive capital from the Indian upwardly mobile youth. That's one huge shift. The second big shift is, I think a lot of people don't realize that the largest pool of young digital youth outside of any geography is actually in India plus Southeast Asia. 1.4 billion folks building the next generation of the global economy is actually here, even beyond China or anywhere else. So that's the second big. And third, I think from a policy perspective, both Indian, the proactive nature in which the AI mission and some of the digital public DPI infrastructure that's happening in this country, plus this new geopolitical angles that we spoke about. Now, for this node is undeniably the most important node for just not talent, but infrastructure. Digital infrastructure for AI, for compute, is not going to be all North America based. And that infrastructure is going to be dispersed. And a lot of that infrastructure, because of power, I'm sure you're going to be discussing this afternoon the realities of power. See, one of the things we have is huge solar and sunlight, and we don't have these kind of challenges like in the US on choosing between oil and solar. I think we have definitely chosen sustainable power, and sustainable power is what's going to drive a lot of these data center infrastructure. So for all these reasons, and the last thing I'll talk about is the digital semiconductor technologies. Even the geopolitical networks of supply chains in semiconductors have shifted. And India is a great place. 20-25% of all global semiconductor design happens in India. But guess where a lot of this packaging and testing happens? It's in Southeast Asia. So this combination of design in India plus get all your next generation semiconductors packaged and tested in Southeast Asia, I think is a combination that is also going to be, I think 100 billion opportunity. So I think, so there's multiple dimensions why I think we are sitting on a new dispersion of global value creation. And the new alpha is how do we, is with the founders, and as investors, we will help intersect that opportunity.
Wonderful. Thank you for sharing those perspectives. And I think you're such a great example of even the giants of today started out as scrappy new ventures 15, 20 years ago.
And just like what we heard, so we were operators. So we started from being operators. So none of us in our team ever went to a business school. So we were operators, engineers, but started out building funds.
Perfect. Well, thank you so much for joining us. So, gentlemen, thank you. I'm going to usher you off of the stage as we get ready to welcome our next panel. Thank you.
Thank you.